Hey everyone, Couch Investor back to another video for today. So let's talk about PALANTIR. The last time I've covered this company was, well, in a much different environment than today. The stock was still trading, I think, above $20 or so. The first time I covered this company, the stock was around $10. Now, a lot has changed for the company, a lot has changed around the world. But the title of this video is PALANTIR Stock versus Company. What do I mean by that? Well, the stock can do one thing while the company can do something else. Company can perform very well. The stock can still go down for various reasons. The company can perform very badly, but the stock can go up for a couple of dumb reasons. As we've seen with a lot of meme stocks, things go up when it doesn't really make any sense. With PALANTIR, are they actually doing something very good? Maybe that's why everybody's talking about it. Or is it just a meme stock, a hyped up company that will just lead you to be bag holders for many years? Now, I've covered the company in the past, full review, etc. So if you want to watch that, top right corner, I'm not going to go over it again and again. PALANTIR is not a new company, all right? It's been doing this for a long time, almost 2 decades. But since they IPO'd, they went public, actually, direct listing, things have changed. It has got a lot of attention. The CEO, Alex Karp, has got a lot of attention as well. More recently, he has gone to Ukraine and visited the president, Zelensky, there. That guy has some things of steel. Now, we're going to talk about that tweet in just a bit and why they went there and why they met. First of all, it is extremely risky, all right? It's an extremely risky move for a CEO of a publicly traded company to go into a war zone like that. Yes, obviously, maybe where he went was a bit safer, but still. So first up, a couple of metrics with regards to the company. This is PALANTIR right now. Free cash flow positive, $225 million in the last 12 months. Return on equity is still pretty negative there, but it has been trending up. So let's hope we go into the positive side pretty soon. And then EV to sales, enterprise value to sales. I took this, let's say, metric instead of, well, obviously no PE, but price to sales. It's at 7.1. The ideal one is 1 to 3, but 3 to 6 is okay if you're growing fast. PALANTIR is growing, expected to grow 30 to 40%. We're going to have a look at the numbers in just a bit. Now it's trading at 7.1 times. It's as low as we've gotten since it went public. So it's still growing. Valuations came down, obviously, because, well, the stock is at $9 right now. A couple of months ago, it was well above that. So there is that, a positive side on the stock side of the story. Company side of the story, you can see here that revenue have gone up each and every quarter in the last couple of years. So that's great as well. You would like to see this trending up a bit more as the commercial side becomes bigger and bigger. Now, as for partnerships, before I jump into that, some of you might know already we're having a competition, free to enter. If you win it, you get $250. Link down in the description or in the pinned comment. It's a partnership with me and stockcard.io. It's free to enter, $250 if you win it by the end of the year. Top 5 will get 3 months free access, VIP access to the website. Only thing you have to do, click the link, create a portfolio, join the Beat the Couch Investor. If you manage to beat me, by the end of the year, you'll get a cash prize. So why wouldn't you join, right? And also, if you'd like to support this channel, check out the link in the description to get the top 10 best stocks to buy now, or go to fool.com/couch investor. And now let's go back to the partnerships. So more recently, it was announced that PALANTIR expands partnership with the US Space System Command. So it's written here, PALANTIR Technologies announced today that the US Space Systems Command, Battle Management Command, Control and Communications awarded PALANTIR a $53.89 million increase on May 24th, 2022 to its 2021 award of $121.5 million. This increase brings the total value of the contract to $175,399,333.4 and ensures the continuous delivery of PALANTIR's data and decision platform to support national security objectives through March 2023. Pretty big announcement. That's also why the stock was up yesterday. By yesterday, I mean Thursday. Last week, we also had this announcement that a partnership with the world's leading automakers and mobility providers, Stellantis, probably familiar with the name when talking about Tesla. So Stellantis will deploy Palantir's Foundry operating system across the company's brands, business functions, and plant locations to accelerate its digital transformation into a sustainable mobility tech company, improve supply chain performance, enhance vehicle quality, speed deliveries, and scale marketing and sales efforts. Now, this is not a new agreement, but this one will expand Palantir's previous relationship with Stellantis founding companies to a global enterprise-wide license across the company's vast ecosystem and 14 iconic automotive brands, which you will see now on the screen, with Palantir Foundry powering decisions across markets and functions at what became in 2021 a world leader for a new era of sustainable mobility. So pretty good news for the company. Again, each and every quarter they keep adding new contracts. The bigger the contract, obviously, the better. But as we will see in just a bit, for last quarter, it probably under-delivered, right? And again, going back to the story, stock versus company. The company is doing, well, the underlying company is doing whatever it can, right? But the problem here is the sales part of the story. Alex Karp has talked about that a long time. They have tremendous good software, but they need to sell it. You need very, very good salespeople to convince other company to buy your software. If you have no good salespeople, it doesn't really matter if you have the best software in the world. People need to buy it for you to, well, have revenue. Now, for the stock, again, the stock can do whatever it wants in the short term. And very, very important to note, and here I'm bringing back Peter Lynch and his genius thinking of investing. The stock doesn't know you own it, all right? Don't have a relationship with your stocks like you have with your wife or with your husband. The stock doesn't know you own it. So if you bought it at $20, at $10, doesn't really matter. If you think emotionally, if you think the stock will be like, I will have to go back because Mr. XYZ bought me at $20, now I'm at $9, it will have to go back so he will break even. No, the stock doesn't know you own it. You only know that you own the stock, and that's about it. Cut emotional ties with this company, because I know Palantir has been talked so much on YouTube, on Twitter, because, well, a lot of people made a lot of money by making these videos. A lot of people get a lot of attention by talking about this company. But at the end of the day, you're putting money into a company, you're becoming a shareholder of that company. So you better understand why you put that money there. And you better also understand that the stock does not know you own it. So if you think, oh, I'm going to sell it when it goes back to $10 or $11 or so, maybe it will never go back there. So think for yourself. If you don't like to own it anymore, just sell it and move to something else. I hope that is clear. And now let's have a quick look at the numbers. So Palantir reports revenue growth of 31% for Q1. Commercial revenue is up 136% year over year. Now, that might sound extremely good, but we were expecting better numbers, accelerated numbers actually, and especially in this current world environment, you would have assumed that the numbers would be much, much better. So commercial revenue grew 54% year over year. US commercial revenue, as we've seen, 136% year over year. Government only grew 16%. Now, again, the government budget will need to be spent, I believe, by the end of the year. I don't really understand how the system works, but from what I listen to people say, it should be spent in the coming months, in the coming quarters. Customer count grew 86% year over year. By the way, if I'm mistaken with something, do leave it down in the comments below. Loss from operations of, well, $39 million, representing a margin of negative 9%. That's up 2,400 basis points year over year and 500 basis points sequentially. Now, adjusted income from operations of $117 million, representing a margin of 26%. That should be going up in the long-term future. Cash from operations, 8% margin. Adjusted cash flow of $30 million, representing a 7% margin. Again, for a software company, those margins should go up in the long term. Otherwise, there's something wrong with whatever is happening here. Now, as for Q2 and full year outlook, so they're guiding to a base case of $470 million in revenue. There is a wide range of potential upside to their guidance, including those driven by a role in responding to developing geopolitical events. Let's see how that develops. We expect adjusted operating margin of 20%. And for the full year 2022, they continue to expect adjusted operating margin of 27%. And per their long-term guidance policy as provided by the CEO Alex Karp, they continue to expect annual growth of 30% or greater through 2025. Now, yes, for those that will already write this in the comments, yes, stock-based compensation is still high. Sales and marketing is actually a bit lower as well. Cost of revenue is lower. Stock-based compensation is still high. Yeah. Dilution. Yes, you get diluted here and there, but overall, if you look at the S1, you're already seeing the whole stock that is available out there. And last thing, as I said at the start of this video, this was the tweet. So today, this guy right here, I don't really know how to pronounce that name, and President Zelensky hosted Alex Karp, CEO of Palantir. Alex is the first CEO who came to Kyiv after the start of the full-scale war. Impressive support and faith in credibility of investments. Agreed on office opening and digital support of army. Could be something amazing. Can also be very, very risky when you put a target on your back like this. So overall, to conclude, I hope the story stock versus company is now pretty clear. You can apply this actually to most of those growth companies out there. There is a difference between the stock and the company. As long as the company is trending up, the stock will eventually follow it. If the stock is already going up but the company is going down, it's time to sell your position because eventually the stock will realize that the company is trending down and not up. So overall, those are my thoughts. Obviously, do share your thoughts down in the comments below with regards to Palantir, the recent moves, Alex Karp, etc. All down in the comments below. Join the contest, it's free, so why not? Link down in the description and in the pinned comment. And as always, if you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next video. Bye bye.